This is London with Bitcoin Spike and VIP Trader looking at an open in the market with a drop today. Right on the fire sale line on the 5 minute for Tesla. Taking a look at that fire sale line on our fire and ice. A little bit of a tumultuous event over the weekend, looking at a nice pickup on Tesla. We will discuss the details in terms of a pickup a little bit more aggressively here. Let's take a look at NVDA. Also on that fire sale line on the 5 minute, trying to hold. We will look at the dynamics this morning as the hourly is close to engaging on that 20 moving average on NVIDIA and the specifics. Let's take a look at the 4 hourly very quickly as we look at a drop, in the market. This is London, former hedge fund owner, private, non-SEC, not financial advice. In terms of the details, this is a delayed stream. We have got up 8 wide in terms of time frames. If you're not familiar with the layout here, we invite you to pay attention to the preceding streams. Without a doubt, we're pushing below, just riding that green buy line, it looks like on NVIDIA. Taking a look at the green buy line on the 15 minute as well, and that lower line has been completed on Tesla as well. That lower standard deviation band, rather, a target hit, nicely done. Let's take a look at Bitcoin very quickly. Bitcoin backing off of a key focal level that we had been really focusing on here recently, which was that 200 weekly moving average. I've been saying we are long over, short under, and we've grinded along that line just a bit this weekend. In terms of a completion on Bitcoin, we just completed to the downside. In terms of the hourly and the 6 hourly specific standard deviation bands, we will pay attention to, but not exclusively rely on, the particulars as Bollinger Band tactics may be in play. Understand it's not our sole our sole tactic, but it is one that we pay attention to. Looking at the pickup with some hot hands early today, looks like, and guys, you can almost call this 2 minutes into it a drop pickup on Tesla. Did pay 0.65%. Nicely done in terms of the opening price action. First 2 minutes on the drop, absolutely. Payment occurred to the traders. If you were a part of that trade, congratulations. Quick trades, flash trades. In terms of stop losses, always. In terms of the particulars, let's take a look at that 4 hourly. What's going to be in play now? Either long over or short under that specific cap line on NVIDIA. Paying attention to NVIDIA. Let me actually bring this chart back to Tesla. Hope you're all doing well. Hope you had a great weekend. A little bit of geopolitical tumult this weekend. Absolutely. As we look at the specific daily capital control line, nearly immediately in play here on Tesla. Pay attention to that capital control line. We want to take a look at the particular entry possible here at the 253.46, $253.46. That's a line of interaction we would anticipate, along with, as we were to look at the potential pickup at the 252.72 on Tesla at that specific 20 moving average. Okay, that 20 moving average on Tesla on the weekly time frame. So the 4 hourly currently in play. You'll see the specific pick up exactly on that cap line here. Congratulations to anyone who did pick up. That's in the money right now. We have some obvious geopolitical issues from this weekend. It goes without saying. It'll also go here by without specific comment, okay? So some geopolitical issues firing up across really globally to add a bit of a we can talk in terms of the commodity, right? In terms of the commodity feature of oil and potential uncertainty, oil becoming a bit more attractive and uncertainty becoming a bit more pronounced in terms of at least that commodity, which can affect the markets negatively. Okay, so any increase in price with anything, particularly a major staple such as the commodity of oil, we're looking at a potential downside play for equities, right? A little bit of just a fear factor in line with the pricing dynamics of oil, particularly as something which could operate against the markets. So looking at the hourly, lower pro has engaged. If you're trading fire and ice, we're really looking at and concerned with the operation below the specific capital control line here on the 4 hourly, given that specific candle set on NVIDIA. Taking a look at that capital control line back to Tesla, and I'll always try and really just reinforce exactly what we're looking at while we're looking at it. That daily line, the capital control line, is going to be something the bulls are going to try and enforce. Okay, try and enforce in terms of Tesla. And looking at the dynamics in play, we can go through the details. Looking at Tesla, we had a bit of a dynamic wherein we were expecting a potential, and I can bring this up. Let me go ahead and see if I can find this in the back here. But in terms of a throwback, we're going to talk about the features in play. Was it on? Let's discuss this very quickly. Looking at the framework here of the specific chart as it would refer to or apply to NVIDIA. This specific pattern feature here, that specific bell pattern or expansion pattern that we were dealing with on the lower time frames, you'll see this more pronounced than the hourly, but that is an expected throwback consideration for the market. Would have liked to have seen some powerhouse move up and out and a continuation of absolutely of the role that NVIDIA has been on, but a bit of a pullback on Monday amidst the geopolitical international concerns, I think is at least technically within the framework of what we had expected. If we were to look at, let's see, NVIDIA on the particular, let me go to like the 3-minute time frame. Yeah, if we look at the 3-minute time frame, you'll see that quite easily. In terms of that preceding level of resistance, throwback, bam, with a confirmation of really a near bust on that breakout for NVIDIA. We're just seeing that preceding level of resistance operate as a resistance to support feature. So that's something we commonly see 62 to 67% of the time. It's not 100% of the time, we know this, but looking at that specific move, be prepared for such level of resistance, right? Reconfirmed even amidst the specific attempted reconfirmation bust up, over, and out. That is that original level of resistance, which is currently engaging where orders have been parked. So where are we in terms of NVIDIA? Let's look at from a pattern basis what we'll be looking at after we had a nice trade opportunity right on market open. I think you'll agree, a nice drop within the first 2 minutes. Traders got paid. We have to say traders who may be subject to some lack of, let's just say some difficult conditions geopolitically and internationally right now, as the markets would digest and either overcome those specific issues or just trade past them or let them affect the overall markets. What we'll say is amidst that level of uncertainty, we have seen the markets immediately provide an opportunity to trade up, out, and early. Okay, so that's nice to see in the first 2 minutes. Fire nice, engage. Just incredible to see and be a part of with you guys. That's a nice dynamic of the market. First 2 minutes, no stress, hassle-free trade opportunities. It's what we like to see. Let me go ahead and make sure in the chats we don't have any immediate concerns or otherwise. And I hope you're all doing well. I know that you're not you're not afraid of volatility. First and foremost, that would be our mantra, is that we search it out, right? We're looking for that volatility. Level of potential support engagement along with preceding resistance on NVIDIA. Just not what we wanted to see in terms of this specific feature bust to the downside. This is one of the elements in play, though, that you'll commonly see with a preceding level of resistance and that throwback. So what do we have on NVIDIA? Let's capture the bull march here as we try and set additional feature on the 5-minute. Well, now we have that additional take. We see the level of resistance engage across that lateral preceding pivot, which has now established a flat top in this zone. So what will we be looking at today? Well, we'll be looking at a potential, and this is where I set my specific, let's see, set this specific alert function. So I'll get a phone call if and when we are at the 257.7. If I drop it just a bit, of course, I'll get a pre-indication that that level is directly in play. That's going to be the line in the sand for today. Call it 258. Okay, sorry, I keep saying the 2 for Tesla. Pardon, I'm looking at 2 screens. Call that 457. The 2 would be nice, wouldn't it? Unfortunately, we don't have that opportunity. Since when have we not had that opportunity of a 250? Yeah, we did before that just blowout earnings, but that 250, yeah, it's been a while. That was a good trade ago. So yeah, sorry for the confusion there with Tesla. What I'm going to say is, as we look at this bottom line pickup, as we set another flat top resistance, it is an indication that the buyers are in the market on NVIDIA. right? It is an indication, flat top resistances. Just be prepared for anything in this zone as we would look for a value consideration and expect some degree of a potential winding of the road if we are to make it up to this optimal level of resistance across the top for this spectacular pattern. You got it right. This would be a spectacular pattern to trade. Our weekly specific fire and ice line caught this move just perfectly. So congratulations in terms of that specific move. Let me make sure, I'll leave that there actually in terms of that level of resistance. And we have Venus in the house. What's up, Venus? Good morning, London BIP. Thanks for streaming. Welcome. Absolutely. Thank you for being here. And nice to see you this morning. Hope all is well. Venus in the house. What's going on, Venus? So looking at the ultimate, and just, you're going to find two sets of people. There's going to be one set of people here. They're going to back off this pattern. They just are. And they're going to have 20 opportunities or 100 opportunities back off of it. You're going to have another set of individuals who's going to literally stay consistent with driving to this top line resistance. So if you are in either camp, do not let your predisposition operate to your detriment, please. Okay, don't let your lack of a predisposition operate to your detriment either. You heard it. Do not let your lack of a predisposition in terms of being a bull or a bear operate to your detriment. Understood? You got it. Looking at some of the different features in play, we can look at NVDA. Okay, looking at NVDA, looking at this, we did have a little bit of an inverse head and shoulder here. The micro patterning stepping up along the way seems to be the preferred march along as we deal with those wave formations to the downside, and we see them re-express now to the upside. It's just critical that we continue to regard the preceding lateral pivots to the left as, you got it, as potential take zones, a natural take zone. So we can definitely say, well, there's geopolitical, international uncertainty and causal events that are affecting the markets, fine. But we also have a clear writing technical level of interest, which is undeniable, which is a take opportunity in the market. So looking at the specific pickup here, let's take a look at that preceding level of resistance that has engaged. Bulls have decided to pick up along that line. And what's holding is the specific right now, what's trying to hold is the hourly 20 moving average. Pay attention to that hourly 20 moving average is trying to hold. Bulls are trying to hold up and above that level on the hourly on NVIDIA. And what is that telling us? Oh, that they drove down for some additional value below there too. And we do have that marked, which is important in terms of that preceding level of resistance that we just marked out on the specific pattern framework for that expanding volatility, that bell formation. So this is going to be the line in the sand right now. This is the line in the sand right now as we were to look at NVIDIA on that 20 moving average on the hourly, big time. Now we are a bit, let's see here. Let's look on I want to look at some different time frames and see if we have any competing interest from the bulls to the bears that is immediately available. While we look at that potential hold and we could say an aggressive move beyond that specific hourly. Let's take a look here, particularly at the, that's not a nominal move. That's a 0.53% opportunity for value below that 20 moving average. We note such. Let's see which other specific levels are factored into the equation in terms of clear takes or otherwise, or clear entries or otherwise. Looking at, we're balanced on the weekly. I think you guys would agree, being on the weekly on NVIDIA, we're balanced, meaning we are just in, really, this is a great opportunity and a way to open the week on NVIDIA. Great technical, I'd say dynamic in play as we're looking at a doji to start off, and yes, it will build out, but the framework of a capital line, control line, and a 20 moving average above and below respectively just sets the tone quite well, doesn't it? You'll just see last week was quite the opportunity in terms of the short on the 20 moving average. You see this on NVIDIA. This was the capital control line short. Boom, did trade quite well on the open, noted. We'll take a look at some of the more advanced parameters of the capital control line and its function in terms of pricing and time differentials as time marches on here. So taking a look at the momentum, I have various sets of, I just want to alert you to this, we have various sets of specific right line indicators, bull or bear, to the right-hand side of these specific pattern, I'd say specific time frames rather. So when you're seeing the red, the triple red here, that's just an indication that we are down, for instance, on momentum, okay? That we're also down, for instance, in terms of a stochastic reading, a direct stochastic reading. Then in terms of an advanced filtration system, crossover filtration system, we're also down still on that. So we're really operating with you know, the understanding that these are momentum stochastics, and these are as advanced as I can bring without too much clutter, at least to identify where we'd like to look in, right? Where we would like to begin to look in. This is seeming relevant to the extent that we would say, well, hold on, we have a positive stochastic, we're bullish stochastic on the particularly hourly right now, okay? I want to pay attention to that, okay? While my momentum is down on the 4 hourly, for instance, on NVDA, I am looking at a situation where I do have a stochastic that is still technically bullish on the 4 hourly. So while we're in agreement as to some bearishness on the 3-minute, 5-minute, 15-minute, we can say that there is at least a lack of confirmation with the higher time frames right now, that hourly and that 4 hourly, as we look at the need to hold on to the specific level of momentum. And this specific feature has been inconsistent precedingly, but that 4 hourly, to the extent that it's a commanding technical feature that must be considered. I'm just bringing to your attention essentially these specific labels here as we try and not over populate our charts, but as we try and definitely present some additional maybe just even inspiration in terms of how your charts are set up. And these are just some tools that I have personally created over this past week or so to try and really designate into confirmations versus the lack thereof. So a bit of a grind along that 20 moving average. We can definitely say that on the hourly. To the extent that the bears are pushing below the 20 moving average, obvious implications. Okay, to the extent that the bulls are maintaining and pushing up and above. There have been trades on both sides this morning. Bulls engaging again with a rebound trade onto the 20. You got it. Levels engaging again on the 20 with about a 0.2% move to the upside. So your entries on this level of a trade become very important. Looking at that specific stochastic, trying to hold and outweigh that momentum potential drop, which has not set yet on that dropping momentum. However, yet the current status is such. So looking at your trade ops or opportunities straight out of the starting gate, we had them. We'll note that in the market in a bit of a tenuous starting move here. Bulls looking to reinforce, at least for that first push beyond. Which again, we did cover that bottoming. The specific, we covered that quite well in terms of the market open. I hope you caught that on your own screens. Again, if you're setting up your own trade station, you're going to see the dynamics here in play, and this is going to make a lot more sense to you. We don't want it to be confusing. At the same time, we do not mind to the extent that this is nearly proprietary. As we were to discuss our functioning and level in the market, we don't mind a little bit of a blend. We don't want to blindfold on the residual of the traders, but to the extent that there is an element in play that we are safeguarding our own goodwill and tactics in the market, we do always point traders in the proper direction to find the alpha in the market. But we'll just remind you that that's something that we have worked very hard on for a number of years. And so to the extent that things may seem a little bit crowded on our charts or otherwise, I just will invite you to be that solution for yourself in terms of unwinding the alpha and finding that alpha and generating it here. On Tesla, the key focal is going to be that daily cap line. Was the ideal pickup in line with some fire sale lines on Tesla today. Let's take a look at where we're at on the. We're noticing a differentiation here between the hourly. Yes, that hourly on NVIDIA, which is a push now up and above on that 20 moving average, and on Tesla being below and having met that hourly lower standard deviation. Again, our ultimate, if we were to have to really expound upon this, and detail this as the looking at the equities gives us an opportunity upon a high volatility circumstance to integrate in our tactics and our pattern practice into not just an equity, guys, but more so into our mainstay, which is Bitcoin. We are not going to miss the opportunity at all. And you may say for you personally to participate or otherwise, I will say directly in equities, I will say for us to miss the opportunity to be exposed to additional patterns, to additional confirmation of the tactics which we hold really close to the vest, right? In terms of the specific tactical regards coming from or stemming from New York Institute of Finance and or Volkowski, the foremost authorities on trading. We want to, and we welcome every opportunity to engage in the further refinement of deployment of and engagement with said tactics on a bit of a broader spectrum than just per se Bitcoin. So taking a look at Bitcoin, kind of liking what I see here just in terms of the 3 minute or the 5 minute. Anytime that we start to see a little bit of a grind, and it's nice to bring up the 15 minute as a threshold, that level of resistance being the 20 moving average is currently in play. But I do pay attention anytime that I personally see any type of a structure in the market that starts to appear a little bit along these lines, right? What is that telling me? It's telling me that we are in a position where we are looking at an increase in volatility, and I would prefer really that bottom line support here. I just see that as attractive because I want to be a part of, and notice the level of deviation here. That is not to my benefit. If I'm a bull, I don't like that per se. I'll take a downward sloping channel any day of the week if I'm a bull. At some point, generally these will become bullish. However, I prefer to operate in the framework of an expanding, decreasing line of support and resistance, to where I've got a higher level of probability in operating with this level of recognized volatility. I appreciate the opportunity to operate at a level of support or below from a bullish standpoint, and to set my targets lower in the market than the residual of the market participants who are literally just asking the framework question of, well, this looks bullish, I'm going to get in here. And we're always structured in anytime that we get a descending line of support in and along that level of support for maximum value entry, and they're below said level of support. So those dynamics in play, they just don't change. Optimal in terms of the 15 minute to evaluate that up and over possibility of the the bulls taking control of that specific pattern framework on Bitcoin. And we would of course take a look at, in addition to said expanding volatility, but anytime that you're in the market and things have slowed down or you do not have a direction, the best direction that you can get, I would just tell you from a probable standpoint or probability standpoint, is going to be increased volatility. That's why you trade. I'm going to tell you, it's why you trade, is for the volatility. Absolutely. So identifying the levels of volatility, not just a generalized pattern hunt, right? We're on the hunt for any and every pattern. You want to find volatility. It's why you're in the market. You want to participate in the volatility with max probabilities and a maximum value approach, whether or not it be to the bullish upside or the bearish downside of said volatility, as just demonstrated by NVDA, right? Taking a look at NVIDIA with a bit of a crunch down and hammer through. Nice to see. Let's take a look at this on the, which time frame were we? Let's take a look at, there we go. This preceding bust of the pattern, this is what I was looking for, the 5 minute or I think we're on the 3 minute time frame, right? Not only would we look at the expression and likelihood of getting back to a level of resistance on this said pattern, but as we were to look at a reconfirmation hit on said pattern, this is part of the equation of volatility that we also look for. A level of resistance getting revisited here on NVIDIA. This is part of the equation as we look at volatility. It's a return to those established levels of resistance, or those essentially those respected levels, those levels of resistance or support. We could say they're part of a demand contract, right? That demand contract getting revisited And absolutely, the trader's saying, yeah, we're going back to where we were at. We want to revisit the scene of the crime, this breakout, busted pattern. We're coming back right here. Very, very popular move. To the extent that it's a highly probable, let's say it's a popularly considered move for a specific short back to said area. The fact that we have a multiplicity of additional patterns in play on NVIDIA does add a bit of muster to the equation. We have to muster through some additional issues or consider toil through an additional few issues as we were to look at, for instance, inverse head and shoulders. Right? We could also just clearly say, okay, let's forget the volatility. I understand they're higher probability trades. Fine. Let's take a look at the specific inverse head and shoulders here and a return to a neckline. No problem. We can take a look at that. We could take a look at if we were to really expound and say, well, okay, we also have a descending triangle here. Absolutely. We can take a look at the myriad of additional possibilities when I'm looking at the and analyzing the expanding volatility. It's because it's a value-oriented approach, and not only in terms of entries, but also in terms of the specific probabilities really in your deployment of capital that really structures you well for participation in the markets. And we can also, it could just be a never-ending story as you look at more complicated assets. You can continually sit here and say, well, we also have, this, triangulation. We can start to point out the defects in each and every pattern. Right, we can do that. It's not necessarily required if you can find your mainstay pattern in the mix as you're looking for an asset. Particularly it's Bitcoin for us in terms of that volatility, and she creeps along, she does. So to the extent that we have been attracted to some other market movers such as NVIDIA, Tesla, and the like, what we will say is we are attracted to those opportunities wherein the volatility is there, right, on any asset that we choose to focus on. That's issue number one. Whether it be Bitcoin, NVIDIA, if you're trading that, or Tesla, whatever you're trading. The issue is that we want the volatility. Then we want to be a part of the express volatility in a rational way that maximizes our potential for profit, right, and minimizes our risk. Agreed, right? So identifying the volatility, focusing on volatility, the fact that we're consistently talking about volatility, it's what we're doing, right? So as a preferential here in terms of the expression, are there other accompanying patterns? You better believe it. Does that really lighten up our focus on me wanting to continually focus on patterns that involve volatility? No. Will we shift into additional patterns, inverse head and shoulders, cup and handles, ascending triangles, descending triangles? Guys, we'll deal with it all. We do, particularly as we were to look at opportunities to potentially climb this ladder for the bulls, let's say on NVIDIA, and establish a cup and handle, and establish a specific, you got to establish an inverse head and shoulders, right? And establish, an additional inverse head and shoulders. It's just, of course, those dynamics are in play, but when we look at a max probability move, I'm not going to forget this, okay? I'm not going to leave these behind to the extent that they're uncomfortable to look at, and you choose not to identify them on your own behalf. I'm just going to promise you it's because you haven't done the research. I hate to say that, but it's a fact. If you've done the research in the market and you know the proper answer as to why this is being focused on, it's a case closed. It's absolutely beyond worth even mentioning it even further whether or not we want to focus on this pattern. Now you're gonna look at every chart and say, well, why isn't this on here? If you've done the research, if you've literally done the homework that 99% of the market participants think they've done, if you've really done it, you're gonna look at every single chart and say, well, why isn't this on there? I just promise, guys, you know this, and we're lucky to know that. We are absolutely lucky to know that, and I appreciate everyone who has made that fact possible, without a doubt, who's made that fact possible. So looking at the pickup on Bitcoin right now at again, lower standard deviation hit on that 6 hourly. We can let's go into the multi-time frame on Bitcoin and take a look at that 15-minute again. Is going to be the level to beat. A little bit of a slow grind along in these in the specific increasing volatility again. And the fact that we have that internal volatility expression here, if I do disregard a specific level of resistance support feature as such, with a level of a defect, you just know that at some time frame level, this specific candle is likely excluded, just so that you know that specific candle feature is likely excluded on some specific time frame. Okay, if you can make out the pattern, and just understand this as you trade, if you can make the pattern out and there is a glaring error on some time frame on the lines, likely, right? It's going to be on the lines, as this is going to be expressed most likely on a cross time frame basis, this defect, or incorporated into here somehow to where we've got, you'd have to have a bit more of an advanced understanding in terms of how the candle framework is going to incorporate into more likely a channel feature and a channel formation than it is going to incorporate into an expansion of volatility. I don't think that's required, okay? But if you have worked with a lot of different time frames frequently, you'll understand that this is more than likely going to be incorporated into a specific descending channel framework than it is to be eliminated in favor of an expansion. That's just what it is if you worked with a lot of time frames. What I will say on a multi-time frame basis, as we see that 15-minute, 20 moving average engage, we are at a position where this level is trading, right? That's a level that is trading and tightly. Bitcoin just, throwing around a 0.07%, 0.08%. So we really need to see some sort of a move up and over with that volatility that we're really looking for. The drop was a nice opportunity along that 6 hourly. I just pulled up the 6 hourly to pay attention to it today. It's on our chart in terms of probabilities that we focus on. So we're still short of that 8 hourly target, but having hit into specific 6 hourly downside band. Don't want to give you guys more to look at than you need to look at, but also that Fire Nice lower pro line has engaged along with, let's take a look at the specific 4 hourly has been difficult. We would have liked to have gotten to the green buy line in the 4 hourly. We don't like hanging out in no man's land. Absolutely. We're not big fans of hanging out in no man's land on that 4 hourly, particularly because it's so consistent for us. We're seeing just a bit of action up and over, bulls trying to push up and over. That specified 20 moving average. Let's pay attention to some additional features. A bit of a double bottoming, attempting just a W formation, trying to engage on Bitcoin with some light volatility. Really, Bitcoin took a front lead on the move, given the weekend's events, etc. internationally. The geopolitical and or other conflict based or just geopolitical in terms of we could really say in terms of just some other natural disasters happen. Just a rough weekend, guys, and I don't want to get too far into the details. I don't want to turn this into a non-technically oriented trade endeavor as we were to look at things. Certainly not behaving insensitively. Just want to stay focused while the market is here. It's a great time to focus on the market. Right, in terms of potential distractions from the market, while fundamentals need to be included in your trade game, my personal recommendation is to stay focused on the market. Without a doubt, do not lose a trade opportunity, as we saw in the very get-go out of the starting gate on NVDA and Tesla, as we saw the specific drop perfectly hit into our specific fire and ice line for a 0.5, 0.6% move. Don't drop the ball, guys. Don't sit there and find yourself, mesmerized into a television lack of a solution in terms of commentary or otherwise. Don't do it. Focus on the markets. Watch the price action. Absolutely. That is the number one consideration for me as we look at the markets and how we're going to be engaging with them for profit. Looking at a retest of this low situation, preceding low, engaging to an extent on NVIDIA. Bam. Cross dynamics. And I would say I'd look at this hourly feature again. The up and over, bullish, down and under, bearish is really the call to make right now, as that's the key level of consideration as we look at being open in New York for about 35 minutes, 34 minutes. Not too aggressive of a move, but let's take a look. 2.8% to the downside, not a screaming day to the downside. Right, Nasdaq off by 0.6. Tesla off by about 2.11. Nothing that couldn't be recovered. So as we look at this, it is irretrievable case where we're beyond recovery in the markets today. Not necessarily, but as always, guard your guard your positions and your risk, your level of risk with a reasonable, more than reasonable amount of care, without a doubt. If you are long or short over this hourly, okay, on NVIDIA, if you're long over and short under, that seems to be the primary level in play. Can we grind along it for a while? Sure. But do I expect that to be the key determinative that's really highlighted for us is the action along this 20 moving average, long over, short under? Yes, that seems to be the key determinative, with the understanding that for several hours on that hourly, for several hours, we can retest this level and it can be determinative over a series of time, or time equivalent to frustrate or not be accommodating to you. Okay, you can see the perfect hit here, certainly accommodating on the 20. It's a key level as you were to look at the specific move to the upside. That was a 4% move right over a 6-hour period of time. And that's just going to be the line in the sand. If you're on lower time frames, to the extent that you're on lower time frames, say, that's fine, I want a 5-hour fire sale. That's just it. You got to have your 5-hour fire sale. That's fine. You got to have your flash trade at the equivalent preceding pivot. That's fine. And I'll just remind you in the context of when we want to, and this would be a specific exact time where I would like to. Okay, just personally. Of course, I'll remind you to look at your specific indicators here in terms of your momentums, right, that are being generated. This is just one of the times, and I always caution myself and you, it's like, okay, well, I'm just in the mood to dig into the lower time frames, right? When we want to start getting into the 15-second, the 30-second, and I know that's where you guys live and eat and breathe many times, is on these lower micro time frames. When I get into them, there's just a bit of caution, right? There's just a touch of a cautionary, a little bit of a prelude into, the notion that you need to kind of be careful on the 5-second time frame, right? You may be looking for a huge, massive move. You may not get it. We did this on Friday. I think we did this on Friday, right? It's like, of course this is going up. On the 5-second or the 1-second time frame, there is a level of trader interest, right? There's a level of trader interest, bottom line. So to the extent that you're on that lower time frame and you're like, I'm picking up down outside of this identifiable level of volatility, level of support, I'm just going to encourage you, first of all, and I do this all the time, trade 500 of these. Trade 500 of these patterns. Then I will tell you, if you've traded 500 of these patterns, you've already dug into the 5-second time frame. True? You've already spent more time with the 5-second time frame than anyone could possibly discourage you from entering into the 5-second time frame, right? Or the 1-second time frame. If you've accepted the challenge and been like, okay, fine, I'm going to trade 500 of these. You've done that by being on the 5-second time frame, right? That's what you've that's exactly what you have determined yourself to enable yourself to trade that high number of trades. Just bottom line. So as we look at a flat bottom support pick up, let's get back out into the specific 1 minute and 3 minute. You can kind of feel a little bit of caution in the market. True, you kind of feel a little bit of a, is this going to be a day where we're going to, and it may be natural at least to say that there are some unresolved issues in terms of potential conflict escalation and or natural or unnatural events that it may be affecting markets overall, right? I would encourage you to find your technical level and look for a reinforcement of it, okay? Find your technical level and look for a reinforcement of it, okay? As we are really steepening ourselves in terms of the technical features of momentum, stochastics, as we were to look at some filtered signal calls, I will just encourage you to make this a game or a day about your technicals. Look for your personal levels that you're going to require the market to hold or surrender for you to essentially engage in or cut loose or directionally trade long or short. Focus on your specific thresholds, your technical thresholds that you particularly are going to operate around. I may be covering such, I may not be covering such. Okay, in terms of that, you may, in the context of trading 500 of these specific patterns, and I know when I say that, a lot of traders just must be like, golly, man. Someone telling someone to trade 500 of something, it's like, well, maybe the guy saying it has traded a couple thousand of them and wants you just to, or 10,000 or 20,000 and wants you to at least trade 500 of them so you know what you're talking about. That's just the bottom line. Explore that possibility that it's not work that's going to be, what we say, it's just not going to be, it's not going to, if it produces poor results, I would be extraordinarily surprised if you're not seeing some sort of a benefit off of a real high volume trade routine wherein you're logging in and building a profile with these exchanges and on these patterns in terms of their viability, their profitability, their probability. I really, in terms of how you need to operate with such, it's just a level of dedication. If you step into that framework, I'm going to be extraordinarily surprised if you don't have good results after looking at 500 of these. It's just, it is what it is. Looking at the framework and play again on this lower time frame. This is NVDA. Is she trading? Yes. Is it a pattern that we like to trade? Yes. Are the probabilities there? Yes. Do we know where we're most likely headed? Yes. And are we a bit understanding of the fact that we are in the, let's say, within a dynamic that expresses itself on a micro element wherein we would prefer to be operating as we just recently were on a macro element. If we were to look at that 5 minute or that 15 minute with a real nice level of support, ultimate pickup with we could almost call this a bust and a partial return. You're looking at a 3-4% move, some real nice action confluent with some additional macro patterning in play. This is ideally, those are ideally the moves that we would really like to structure into and really pay attention once we get involved in a higher time frame solution, right, in terms of what you are to focus on or otherwise. So the smaller trades are the smaller trades. Let's take a look at, and just to be regarded as such, flash trade. I'll just tell you in terms of the potential for operation in the market at a quicker pace than what you're used to, at developing into, if you want to be a successful trader, you could potentially learn to do things quicker. You could potentially learn to manage cash at a different, what are the key features that you would look at as a trader? Well, I'm not having good results with larger amounts of money. Great. I'm just too slow on the exchange or with my entries or exits. Great. Identifying, though, I'm not really great at tight stop losses yet, or I'm not getting the specific pickups, those precision entries. These are all just features and challenges of the market, which I encourage you to continue. And I know that you are continuing to not resolve, but challenge yourself to really identify and really just get the prize. It's right in front of you. Those deficiencies are right there. I don't want to turn into a pep talk. This doesn't look like a pep talk, guys, on the screen. This ain't no pep talk, but it is a realistic discussion that the solutions are in front of you. Okay, they are in front of you, and to the extent that those require just some additional practicum, you got to believe it. Some additional practicum, you got to believe it. In terms of that ongoing feature being primarily that volume. Now let's take a look at these again, and here's the micro, looking at the low to high. Let's take a look at where we did stop out at that specific 38.2, or we ceased to the upside. Don't want to say stopped out, but looking at that 38.2 was the specific feature. So we failed to hit to that 446.95 again. We've seen this. We saw this last week in terms of that lower time frame being a bit catchier, right? Being a little bit more volatile and a little bit more prone to potential, as we were to look at this, prone to potential emotional involvement, right? That you might subject yourself to with a cataclysmic drop of, what's the percentage here, guys? What's the percentage? Cataclysmic drop of 0.34% of $1.50. So as you look at this, these are trades. These are nice trade opportunities that you're going to find yourself really enjoying at some point once you've logged in a bit of the extra, just a bit of the extra in terms of the experiential framework of getting back to these levels of resistance, how, when, where, by which time frame, and the characteristic set of each lower time frame is going to impact you. Right, so it just is, and you guys, some of you are pros at those lower time frames. I can't get you off a 2-second or a 1-second time frame. It's just impossible. So, and that speaks quite well of you, by the way, that you're able to interact at these levels. And what we're seeing here is just kind of a bit of a fractal. We would agree, preceding pickup, demand zone, bam, bam, revisited, nicely done, in line with some of these larger time frames, not just this 5 second on NVIDIA, but we saw that preceding, so let this sink in, preceding demand level. When we see this again on the micro, just understand that that is a level wherein, in addition, and let's just review this, in addition to the preceding breakout point here, that demand interest below is real, right? As is the prior pickup, and it seems like the market is reinforcing this for us on NVIDIA, as is that specific prior, okay, pivot to the top right, or top left rather. Let's see if this will work, there we go. That pivot to the top left, a natural feature. You got it. The pivots to the bottom right, natural pickup feature. So this is on the larger time frame. We can go to the hourly here and still see this preceding pivot, all right? A preceding natural level of, and here we go with a cross trend line, that specific prior support to resistance, common feature that we see, preceding level of resistance reinforced across the board. We'd love to see a build out here of a right shoulder. Right, we'd really appreciate the opportunity to trade this up and over, to say the least, and to gain some additional momentum. And it's one of those days, it's like, could we really see a real green on the screen event? Could we really see the market just pick up and decide to just set things, on course for the bulls to really perform today? That's going to be the question, as we have really dealt with that in a bit of a more isolated or economic, solely economic environment. So that's going to be one of the key considerations that we will look at today. And while we're looking at patterns on the screen which have less than the desired level of probability that we want, true, what do we want to find? We want to find our specific levels of volatility. Okay, so the answer, my friends, as you know, without a doubt, is finding the levels of volatility, of finding the pattern framework of volatility. You got it. Let it just try and wind and grind and get to this. Guys, you get the champ belt, you get the trophy if you trade 500 of these. I'm telling you. Who hasn't traded 500 of these that I'm talking to? Nobody. You all have. I know that. But as you continually are impressed by their dynamics, by those dynamics in play, there's certainly a reason that we focus on them, without a doubt, and it's to get where on every one of them. Where do we want to get on every single one of these? Where's our probability set? Boom, across the top. True. So we're going to pay attention to any mitigating factors here, given what the market's expressing to us, right, in terms of a preceding level of support, flip to resistance, natural take, we just discussed that, without surrendering the overall probability set here of a return to the specific of this equation in play, right? Looking at the max probability being the specific top line resistance. You know this, and she loves to crawl along while we're looking at her and talking about her, and then she wants us to just kind of turn the other cheek for a moment, or turn to another asset or issue, and then she'll let us know where she went, right? That's just the typical standard MO in the market. You guys know that. I hear it all the time from you. Man, I sit down on my computer for like 3 hours, and then right when I move, I get up and the market moves. Like, really, that keeps happening to you? Huh? You need to sit at your desk. The answer, you need to sit at your desk for 3 hours and 5 minutes. It's like it's like, no, that's not the answer. It's always no, that's not the answer. But it's just, the market can be famous for doing that. So I'm a little tongue-in-cheek in terms of the expression of the specific characteristic of the market set, that it wants to accommodate you or not. It's not in the business of accommodating you specifically, nor me, right? The more that we can frame our involvement in the market along with the preceding number of irrefutable decades of information, then we have more of a leg to stand on, in terms of it not accommodating us, but it not laying waste to the preceding number of consistent, consecutive empirical data sets that could be derived from its very existence, right? So it's that best friend that you know so well that, well, you're you're just going to be able to count on what they're going to do. That's how their parents are. That's how their grandparents are. That's how they've always been with you. It's how they've always been with everyone else. It's that best friend you just know is going to be like that, right? So find a little bit of level of comfort, not to shroud it in that level of an analogous dynamic. But what I'll say is not to get personal with the market, right? You don't want to enough said on that front. But yes, the empirical data matters like that. Okay, just to conceptualize it a bit. Yes, the market wants your time. Yes, the market's going to put you through continually these gut-wrenching moves. You got it, right? I mean, this is uncomfortable when you're pointing up here. It's uncomfortable and it costs you money, is the bottom line. You can still get up to this line of resistance. What's uncomfortable about this? It'd be great if the real issue here were what? Well, I understand that this is still a max probability move along a level of resistance. I'm going to reinforce the fact that personally, this is uncomfortable to move back down to this level and anywhere else herein for the following reason, that it costs me money because this level of resistance is dropping. So the further I push out to the right, the further that I push out this direction, the lower my target gets, right? So that is an understandable, non-emotionally oriented expression technically of the fact that we don't want to go sideways in these, right? Okay, now we're on the 5-second time frame. So targets here to the upside, to the downside. Just make sure that your emotions, or if you can craft something rationally about your emotion other than the fact that, well, price is going down, it's uncomfortable. Yes, it's going down, but it's also requiring more lateral movement, which is doing what? Which is compromising your upside target, right? So to the extent that said lateral movement, to the extent, and to be evaluated, to the extent that said lateral movement will encourage bulls to be less anxious about getting up, out, and over this level of resistance, explore such. Okay, the extent to which we're grinding sideways, we have seen one or two patterns in the last week. Okay, in the last week, we've seen some highly relevant patterns that have stalled out and trajected nothing but sideways. I believe that was on Bitcoin. I believe it was Bitcoin who was the culprit for going sideways. But lateral action within a specific, and this is in essence, as we look at it, the call to volatility, the framework of what we're attracted to as traders. As we start to go sideways at all, it's really not what we're looking for, is it? We will take a trade opportunity in terms of a pre-existing level of support, fine. But generally, we don't want to go sideways. We want to be directional, bam, bam, bam. So when we're seeing that, there may be some, aside from your own personal wanting to quote unquote go up, there are some additional features which technically reinforce the fact that you should be a little bit choosy about pushing sideways at all in a pattern that is known here for volatility. Now, if we can get up quickly and get down quickly, hey, no problem. If we can continue this march along, right? I don't like the space between. I don't like that delay, I'm picky, even on the 5-second time frame. True? Fact. So consider those issues when you find yourself in a gut-wrenching moment and we're going back down and we're supposed to be heading up. When you find yourself in those positions, try and explore an additional reason why it might make sense for you to be a little bit emotional about this move. Thereafter, you are in a position to more fundamentally, let's say soundly, technically evaluate your participation and why you could actually reasonably not be emotional, but at least be bothered, right? At least you're justifying and analyzing something technically from a framework that it's not that I really mind the volatility, but don't go sideways on me, right? First of all, don't bust. Value orientation, sure. But if we're looking at the level of resistance across the top and we're going sideways at all, like, don't do that to us. Give us the volatility. You're costing me time. Granted, an additional entry, an additional take, fire nice, killing it, okay, in terms of the indicators at work. But you've just lowered my target, right? That's going to be the complaint. Let that be a valid complaint. As you find yourself being at all emotionally involved in your trading. If you can master that dynamic, and that's something to bring up good in terms of a start to the week, as we focus on the markets, okay? Focus on the trade opportunities that are in front of you right now. That's going to be my goal this week, is to refocus on the markets, okay? And I just encourage you to do that in your specific. There may be things in and out of the news or et cetera that are beyond your control. Let's focus on the markets. Let's see what we can do in terms of a technical advantage. What can we establish this week? One thing that we've immediately established, when you find yourself being over emotional in the markets, try and find a technical rebuttressing of a dynamic in play that would operate technically to your disadvantage, other than see if you can find another compounding factor to even legitimize a different level of an emotional engagement in the market. Yeah, well, I don't like going sideways because then my actual target is lower. See what else you could develop, right? The next time you find yourself and it's a little uncomfortable, your palms are sweating, your heart, God forbid, starts to race, it's like 72% is going to make your heart race. Man, we are not taking you to a horse track, I promise. If 72% of a probability of reaching a level of resistance, guys, if that's going to make your heart race, we are not taking you to a horse track, much less Las Vegas. So this is the move that we like to see. A little tongue-in-cheek this morning. Hope you guys are doing well and had a good weekend. As London with Bitcoin Spike and VIP Trader looking at NVDA, just letting this play out since this specific area here. Again, we're on the hunt for volatility. Looking at a 0.6% move with some additional volatility here and discussing those dynamics, okay? The kind of this crawl up, out, and over. I'm going to go back to a reasonable time frame, and good chat this morning. A good chat. No problem with a little bit of talk, and certainly I will not be insensitive to the entirety of whatever world dynamics are ongoing right now. I will state for the record, I want to focus on the markets. I don't want anything to distract us from the markets, and that's just the best we can do in terms of our duty here, is to allow a zone. Here's your conflict-free zone in terms of absolute focus on the markets. Let's see if we have some fundamentals that come into play. As we see the 3-minute up and over, the bulls trying to enforce that 20-moving average. This is the area where we're certain, that I'm going to say it's an opportunity for us to engage in and focus on the markets this week, like every week. So that's exactly what we're going to do here. And it's a pleasure to be able to walk through that process with all of you as we continue to strive into the dynamics in the market that we find most fitting. Looking at NVIDIA, this is important. We saw this last week, true? I think we saw this last week, a micro bell feature. You got it, micro bell feature on the 3-minute, which did what? Which pushed us back up and over that hourly. True? Yeah, we saw that last week late. That's an example of how the lower time frames can do what? They can encourage you to be directional on a micro basis, but be careful. Be careful of what? What happened on that micro time frame last week? Ba-boom. True? You got it. Just be aware of the revisit as the market is quote unquote talking to you. Be aware of that revisit as you're seeing that top pro line on the 3-minute. Tight trade action, guys. That top pro line on the 3-minute engaging. Absolutely. What is that? It's 0.13%. These are tight moves today. A little bit of a downward movement, and just a bit of a debate here in terms of what the market's really going to do. Is the market going to pick up? As we look at the over and under, again, the key feature being, which is traded again. So we've had really three trades on this level right now. On the hourly, we've had 3 trades this morning. We had a fire sale on that 3-minute and 5-minute on the open, which traded like lightning right out of the gate. It's looking at that first 2 minutes of price action was over. It was 0.6% move to the upside, so a great day for bulls. You got it right. Great day for bulls on the open with 2.3% to the downside, or 2.2% showing on NVIDIA. Tesla down 2.18%. Great day for who? For the bulls, right? Great pickup. Boom, bam. 2 minutes, you're over and out, clear, free and clear of that trade on those lower time frames. Paid. Note such. Log it empirically in terms of the data set that you're looking at for backtesting purposes, applicable to NVIDIA, Tesla, or whatever you may be applying your data set to. You may just be doing general research in the market for a number of years before you get involved. That's fine. Looking at the dynamic, in addition to that original move that we had on NVIDIA and Tesla, great day for the bulls, right? What are we looking at right now? And it's not easy, guys. It's not easy to just say, oh, no, look, guys, look at this. It's Armageddon, guys. It literally is. And we spoke about this numerous times over the preceding week that, don't go into the Armageddon. just try and not go into the Armageddon. I've said that a number of times over the preceding number of weeks, not to get distracted by the Armageddon, okay, in terms of the commentators and this and that, and the bears are coming out of the woodwork. They're running from the forest and they're chasing us all. That's not happening, guys. In terms of that, it's a little out of sync with the current technical dynamics that are presented to you immediately in the form of bullish long trades, which have engaged a number of times this morning. True? Without a doubt. So I'll just re-encourage you to say exactly what I have been saying, which is to not focus on the news regarding like Armageddon. You know, just let's focus on the technicals. This week particularly, we're going to focus right on the market, which is exactly what we've been saying the preceding number of weeks. So nothing changes here. Nothing changes here, right? We keep the same dialogue going, the same technical framework going, and that is how we are operating the market successfully. Okay, successfully on the pickup right out of the starting gate, bullishly, bam, bam. Nice move. Successfully on a retouch on the hourly 20 moving average twice now. New candle setting, bulls opportunity to immediately enforce this level. You got it, bulls? This is your third trade op along that 20 moving average. Over bullish, under bearish. Who's fighting? The bulls and the bears, right? This is what makes a market a good market, right? Technical levels that are engaging immediately. Trade ops, literally looking, and I say opportunities, we write this all the time in the back, so I'd say trade ops. Every op is an opportunity, right? That's all that means in terms of that notion. So what do we know what's going on in this lower time frame right now? You better believe it. While we just used the bell to get out up and over on the 20 moving average, this is not fast talk. It's just the truth. As we look at the 20 moving average and the bell formation, that expansion on lower time frame, boom, what do we know is throttling here? Let's dig into it and take a look at it. Bam, you got it right. Now this is exactly a fractal of what we just looked at on the, and it's not to say it's not engaging, it's to say it is engaging. We saw a rehit on this 3-minute, back to the 20 moving average. Perfect hit back into preceding level of resistance, flip to support. Who's happy with this? Bulls. What did they just do? They just entered on this line. So we saw the mechanism in place. And guys, a 0.15% move, tight, a little bit tight. Now, in terms of that though, welcome to the lower time frames, right? Welcome to the lower time frames. What I'll say is this. As you look at the mechanism used to get us up and over, not just this on the specific 3 minutes, but this on the hourly, right? The fact that original pattern formation on that lower time frame, which got you up, out, and over the specific and really traded that 20 moving average on the hourly, is responsible for the move to the downside here. So when you saw that, and I say all the time when the bulls and the bears are fighting this out, it's not just a blind move up and over or down and under the specific 20 moving average here. It is, if you can frame mentally and picture that lower time frame price action into exactly what's occurring here, it makes these fluctuations in price a lot more digestible, does it not? You know exactly what's going on with this move and the quote unquote battle between the bulls and the bears. You got it. What is a rehit on your specific preceding level of resistance? Boom, you got this, right? So that doesn't just apply here, it applies everywhere. It's gonna apply on everything you trade, okay? It just is. So nice insight into that level of a micro hit and that quote unquote battle along the 20 moving average on the hourly. Now you know what these moves have been comprised of thus far. Right? So see through the time frame that you're currently in and understand the dynamics in play on those lower time frames. It's not magic, right? It's not. There's nothing really. There's no magic to the equation. It is what it is. So hope you all had a great weekend. I'll let you guys go here in just a moment so we can go and get in the back and provide you guys some additional charting features, etc. Let's see what we got, guys, on the 15-second. What do we got? We have an uncomfortable set up and over a potential descending triangulation. And every descending triangulation is a potential double bottom feature. True? What do you want to do? Right now, you don't know which direction it's going in. What do you want to do? Huh? You want to identify some volatility. True? Yes. Every time when you get stuck in the mix of not knowing which direction something's going in, focus on your maximum probability moves, okay? And in the context thereof, what's your backup? If this is your primary consideration, and I will not regret saying this to the extent that I'm going to reinforce this patterning framework here to get us up, out, and over, what is your backup? If this is your primary, that's your primary patterning formation here, in terms of this expansion, what is your backup? All right, always have a backup, and then have a backup for your backup. As you're assessing the specific market and your participation with volatility, it's important. Have a backup. What's your next backup pattern? What's the next highest probability in terms of volatility and direction? Because this was easy, we agree? Relatively easy. Getting back up and over, level of resistance, okay, expansion, dynamic. So what's your backup? And then, okay, fine. What's your backup for your backup? Always have a backup and always have a backup for your backup. And once you get good at volatility, you're gonna start seeing it everywhere. You're gonna start seeing it play out more frequently. You're not gonna have to draw it. You're gonna look at this and you're gonna see it or you're not gonna see it, right? Once you see volatility in play, you're gonna get a handle on this, yeah? Is it easy? No, everybody be doing it. You gotta just look at a chart, yep, that's gonna go up, yep, that's gonna go down. Oh, such and such just knows. Well, such and such is potentially ready for a fallout scenario if and when and ever to the extent that, you would say this, to the extent that any kind of expansion turns into a bump and run, right? What are we looking at here? You got it, in terms of potential for a topping formation. We'll reinforce that flat bottom support below in a bit of a cautious stance for any of the bulls, right? Let's see what we got. And about an hour into the mix here, I do have on good authority, period. I have on good authority that there are some VIP who are out of town. I don't think they're out of town having fun. I don't think that they're out of town just, winging it, having a great time and doing whatnot. It may be important business, but I do have that on good authority that some of the VIP are out and about traveling right now. So what I'm going to say is I'd love to sit here and just trade this all day long. You see volatility, expanding volatility or not here? I want you to go back on the 3 minute, on the 3 minute, then on the 5 second. I want you to try and find some volatility, expanding volatility that we hunt for all the time. And I want you to look at it right now without me drawing or you drawing anything and tell me whether or not you see the expanding volatility. If you see it, what are the defects to it? What are the deficiencies to it? Where are the risk components of the accompanying patterns in and along with it? Do you see the expanding volatility in the context of what we typically will associate with that quote unquote expanding volatility? When you're invited to dig into lower time frames, right? When you have a level and you're invited to dig into lower time frames, you can't quite make it out. It could be, it could not be, and you want to keep hunting on a different time frame. Do you have confirmation cross time frame? How many time frames are showing you the volatility, the expanding volatility? We'll latch on to one, and we're excited about it, right? It's something that we want to trade, right? If we find the volatility, expanding volatility on one specific time frame, we're interested, right? To the extent that it's on multiple time frames, we're interested. What is the formation after you say, okay, is there volatility? How is it arranged? Okay, I want you to please pay attention as you continue to trade. How is it arranged? Okay, how's your flat top resistance, or your non-flat top resistance, your descending resistance? What's the angle in question? Okay, of this top line particularly. What's the angle in question of the bottom line? Okay, what is your value consideration in terms of an immediate drop this angle? What risk does it present in terms of an immediate level of exposure versus what is your recoup potential along the top side resistance? Okay, and what is that ideal formation you're looking for? What's the ideal patterning that you're looking for? And what are your compromised features if and to the extent you need to be aware of some ultimate potential or pending downside moves? Okay, we're going to be in a fix today to do what? To look at the specified, pay attention, to look at the specified near flat bottom support on the minute, coupled with a potential here This is just some tricky price action today as we were to look into this. We're going to take a level of resistance carried down. This could pick up as a, if the bulls can step in, going to pick up as a potential micro flag would be ideal in line with that specific lower band feature. Just understand the progression of the patterns, right? It's not that there's not a trade on the screen. I just want to talk through with you the specific pattern features in play. And again, we're seeing that internal channel here as a constructive element of a pattern dynamic. Agreed? Bear flag, not always. Move to the downside, upward sloping channel, internal constructive element and feature. And what else are we seeing now? It's wanting to tell you again, isn't it? Yes, and it being NVDA. He's up in arms telling you again here, preceding level of support pickup engaging. Skipped a level here, noted, right? In terms of that preceding demand feature, typically it's a notion that the sellers are in the market enough to push down into a preceding level of support. Right on. Yeah. So as we see any flat bottom supports noted, and Tesla's been really aggressive on a few of these. Tesla's been quite aggressive on a few of these recently, to the extent that we're ready on this level, and where to the downside here. Without a doubt, you're seeing the pre-existing level in this zone here be a near approximation of a pickup. So that's in a little bit, as we would talk about that, that's not something to disregard in the context of the preceding pivot pickups here. Those demand interests getting satisfied. If we were to look in this specific level here, this is the glaring error on the screen technically right now for the bulls to evaluate on a lower time frame basis, right? We'd have to step up into a differentiated time frame to say, okay, fine. On the 1 minute time frame, we're in line with that preceding pivot to the left, okay? So those constructive features, as we look at a flat bottom, right? As we look at those features, it's going to be indicative generally of the fact that the sellers are in the market. And just understand that is a notion. Most flat bottom supports are broken to the downside. Most flat top resistances are broken to the upside. The majority of such, okay? So they're indicative of what? Of buyers, okay? Flat top resistance, or sellers, flat bottom support. Capiche? Now, there is an attempt to pick up in line with a potential, right? In line with a potential micro flag. We just have differentiation. We have a lack of confirmation right now. It's not to say that there are no trades. In fact, there are a number of good trades that have been ongoing. Down and under that specific hourly has paid, note such. And we've really set quite well on that 4 hourly down and under, which we mentioned earlier. So as you're popping through trades, potential flash trades, etc., and operating in the market, yeah, bulls had not necessarily all quick takes, but a bit of a capitulation after some decent action. A near flat bottom support as well on the map here for Tesla. And we're going to have to look at, what do you guys say? We're going to have to look at, let's look at the chart on Tesla here. This is going to be your macro consideration. As you look at this framework here, we spoke about a bit of a defective framework on the hourly or 4 hourly, bit of a diamond formation. This is on the macro time frame, right? Looking at that diamond feature, we'd be looking for a breakout of this area here. So that's going to be what the primary consideration is. To the extent it's a 1, 2, 3, 4, 5. We know what we like to hold on Tesla, bottom line. What we would like to hold would be the following. Level of support, interest, carry up, although we're aware of what? We're aware, without a doubt, which we've discussed here precedingly, this first handle here, that first pivot handle in here has caught more than once. You got it right. So aware of the pull down feature, resistance to support, bam, bam, bam. Looking at this specific constructive element, okay, of the patterning in play, not necessarily a bear flag with a move to the downside upward sloping channel. Definitely in terms of the construction thereof, we're cognizant of that componentry of the bear flag, okay, being there, but we're also very alert, actively aware of the fact that these are constructive channels within an overall pattern designation or dynamic. So this is a level the bulls want to hold. Remember the fractal we had move to the upside, curl in feature, right? There's hook around 1, 2, 3, 4. This hook around, right? We'll go a 1, 2, 3, 4, a 1, 2, 3, 4. You got it on the micro and on the macro. That hook around into the 1, 2, 3, 4. Yep, hook around 1, 2, 3, 4. You got it. So looking at the dynamics in play, this is a level of indecision in the market that's not ideally technically framed for Tesla. Much less than a 1, 2, 3, 4, 5 up and out. Boom. With a nice level of resistance hit. Boom. Straight line feature into. This is complicated by the overperformance, right? A little of a juke of the market in terms of a great trade that was brought to your attention. Very nicely done. So we're trying to engage preceding flat top resistance. I already saw this level engage as a level of support, flip to support, and now we're just on that flat. Essentially that, let's just call that a mid-level point break on the potential topping formation here. This is an important feature as we're looking at a ride along that hourly standard deviation. Let's go back into Tesla. In Tesla, the ride along that standard deviation is acting as a level of support now. Okay, that's the dynamic in play on Tesla as we see the 4 hourly specific cap line attempt to hold and pick up with some lackluster patterning, guys, in terms of like a bullish framework, just to call it a day, we're going up. No, but we do have some consistencies in play on Tesla. If you're really trading Tesla, looking at the 3-minute, you cannot ignore, again, it's just been a day of preceding lateral pickup. So you're having opportunities to trade. It just looks like the traders are a bit cautious for now in terms of allowing orders to get down to some pre-existing levels of support, really on open or otherwise, that provided a great trade opportunity here and thereafter to establish an attempt at a flat bottom support, okay, a double bottom, really in line with this pre-existing demand zone to the left on Tesla. So, guys, never overexposed at any higher price. If you are out and about traveling, etc., be safe, be careful, and we just hope that it's a great trade week for us as we look at bulls trying to pick up on NVDA in terms of that micro bull flag possible. We're just in a position where we don't have a lot of confirmation. The lower entries are governing, right? Lower entries are governing in terms of the pickup. So bulls a little bit cautious, not too particularly or especially such, but as we're looking at these features, you know the bears are excited this morning, right? What's going to be regarded in terms of bearish activity? Okay, it's going to be at some level, it's going to be our capital control lines. Okay, they're going to be dictating as they did here in terms of a reinforcement level of resistance, right? Bears just clung onto this on the 3-minute, had a nice move down on NVIDIA as we were to look at this. That was a nice, just quick hit. Failure to get up, out, and over until this zone, and really a failure on this lower time frame to reestablish that top side target. As you're looking at that in terms of the lower time frame on the 3-minute, boom, capital line, bam, engaging. Bears making the most of the morning thus far, right? Of the morning thus far. We'll dig into the back. I wish you all the best. Anyone who is out of town, again, be safe. Just take care of yourself, VIP style. We'll be around. I'll be in the back. I'll get you some additional charts. One quick look at Bitcoin. Failure to get out, up, and over. And we're seeing really that dynamic that I spoke of, and it's worth mentioning, right? If we were to look at the dynamic of the increasing volatility, you got it right. What do we do on that 15-minute nearly carbon copy with NVIDIA, et cetera, up, out, and over, and a bust, bam, back down to the pattern. We saw this last week. So that volatility just reconstructing itself. What we'd be looking for now is any flat top resistance, setting the bar on Bitcoin or otherwise, that 27,576 for move up, out, and over. Okay, so while the bears are going to be focused on those flat bottom supports and breaking such to the downside, okay, bears will focus on the flat bottom supports and breaking them to the downside. The bulls are going to be focused on the flat top resistances, targeting to the upside. What do we need to get there? On either of the two fronts, what we need to get there is going to be, you guys got it, is going to be, in my opinion, the number one, if you can find the highest probability pattern to get you to your target. Gotcha. So, watch your momentum, guys. Tread lightly, go get them. We'll talk to you soon. This is London with Bitcoin Spike and VIP Trader. Nice trade opportunities. The first minute or two here in the market. We will talk to you all soon. We'll be in the back trading. We'll be straight out of the starting gate. If you didn't catch the beginning of the stream, you need to plug in. The trades happened really on the opening of New York today, right out of the starting gate, right into our fire and ice levels. Beautiful, nice day for the bulls thus far. Surprisingly, with a red market, nice day for the bulls. trades engaged. And I'll just tell you guys, focus on your specific technical dynamics, and we'll let the fundamentals kind of play their way through this week. This is London with Bitcoin Spike and VIP Trader. Way to trade. Talk to you soon. Take care. Bye-bye.